Welcome to this webinar, which is focused on the climate transition and the data needed for that transition. So good afternoon to those of you in the UK, and good morning or good evening wherever you might be around the world. So thank you very much for joining us today. I'm Jane Goodland. I'm here with Elena Filipova and Jaakko Koreshi, and who are the experts on this topic, but I will be your host for today. So before we get started, it's worthwhile us just looking at some housekeeping rules, if you don't mind. So at the bottom of your console, your screen, you'll see a range of different applications, widgets that you can use. If you've got any questions during the webcast, please do feed them in by clicking on the Q&A widget at the bottom, and you can submit your question that way. Please do load questions as we go through, and we will have time at the end to channel those into the discussion. We will also be asking for a poll as well to look at which organisations, what type of organisations you are from, so get ready for that. And we will also be recording today's webcast, and we'll share a recording after today's event and the slide deck as well. So please feel free to relax, enjoy the conversation, and rest assured we will share the materials with you afterwards. So let's see who we've got on the webinar today. As I said, my name's Jane Goodland. I'm Head of Sustainability for LSEG Group. That means I lead LSEG's sustainability agenda globally, and I have the pleasure of working with many experts across the business focused on different elements of sustainability. And I'm joined here today with two of them, so I'll let Jaakko introduce himself. Jaakko, over to you.
Yeah, I'm the Global Head of Sustainable Investment Research as part of our FTSE Russell business, our index business. And I oversee a team of data scientists and sustainability experts that create tools and data for our indices and other financial products.
Great. And Elena, please introduce yourself.
Thanks, Jane, and good morning, good afternoon, everyone. My name is Elena Filipova. I'm Director of ESG Data at LSEG. And we've been providing and servicing the financial industry with ESG data for more than 2 decades now, helping financial professionals understand those sustainability risks and opportunities that exist within their portfolios across their strategies, and informing more and enabling clients to make better and more informed investment decisions.
Thanks, Elena. Right, okay, just so you've heard from who we are, it would be great to have a better understanding about our audience. So this is where we ask you guys a question. So if you can please get ready for that. If you can tell us what type of company do you work for, and let's make that kind of the organisation. Where we've got a complex organisation, you know, it's the company that you work directly for. So are you an asset owner, an asset manager, a bank, or a corporate? I noticed that we don't have an other category. So if you are not one of those four, then you can either choose not to respond or go for the nearest one. So if you can please submit your answers now, that would be fabulous. Thank you. And do we see those answers coming up? Fabulous. Okay. Right, so we have a nice mix today, but majority of asset managers, follow closely behind by banks and corp. Okay, that's really helpful because it helps us guide the discussion. And please do ask your questions, and perhaps when you ask the questions, indicate maybe what type of organisation you're working for, and that will help us to channel the questions accordingly. Right, so shall we move on to the discussion? We're specifically talking today about climate transition and the role of data. And we are keen to kind of explore some of the existing challenges that the market's facing, and also maybe look at some of the things that can be done to overcome some of those challenges, and perhaps what's in the pipeline as well. So let me start the conversation And this is a question to both Jaco and Elena, but perhaps I'll pose it to Jaco first. Can you give us some reflections around what are some of the key challenges that you're hearing about from clients or just kind of other market participants around data and transition? What are the key issues that you're experiencing?
Thanks, Jane. I think before we get into the nitty-gritty, it's worth kind of stepping back and reflecting on what we actually mean by the challenge of the transition. What does that actually mean? And I think it's often easy as we speak about data and to really overlook the magnitude of what we are discussing here, right? And there's really no blueprint for what we're attempting to do here. This is about an energy revolution. This is about how we produce energy, how we store energy, how we consume energy, but it's also much more profound than that, right? So it is about the materials that our civilization rests on. What do we do with steel? What do we do with cement? What do we do with plastic, right? It's about what we eat. It's about our clothes, how we build houses, cities. So there's massive amounts of uncertainty as we're trying to revolutionize that all in a space of a few decades. And there's also massive amounts of risks attached to that for businesses, for governments, for all kinds of organizations in society. But there's also huge opportunities that are attached to that. And so when we're thinking about the role of investors and finance in particular, they have a key role to play in this, right? In helping us to navigate those uncertainties, right? Reduce and manage those risks, but also seize the opportunities. Now, for investors to be able to do any of those things, they need data, right? And again, these are data sets that don't necessarily exist today, or if they exist today, they haven't existed for a very long time. And so there's a huge push to innovate very rapidly and create this new toolbox, really, that can guide us through the transition.
Thanks, Jaco. And I mean, it strikes me that, you know, it's not just any data, it's kind of like investment credible data. And I guess if you kind of liken it to financial data that's been around for a very long time, we've become, as investors, used to being able to, at a moment's notice, get kind of our hands on investment credible data. And actually, by comparison, some of the ESG data that we're seeing is really kind of a bit weak in comparison, either in its depth or its breadth or its kind of credibility in terms of data source. Thanks. So, Eleanor, from your perspective and your travels around the market, what are the key things that you're hearing as a key challenge?
And I probably will turn the question a little bit. Rather than highlight the challenges, I'll try to highlight what's needed. And that obviously builds on where the holes are, where the problems are currently. And I'll summarize it in with three words: trust, transparency, and targets. Simple to remember, all three start with key. And trust actually builds on your point, Jane, that you just made on credibility. And where we're coming from is a market that services products offered under very different names, whether it's green, transition, ESG, ethical, impact, and on and on and on. The list is very lengthy. While on one hand, it's very good to have such a variety of product strategies, they support innovation and diversification, which is very healthy and good from a financial perspective. It can be very difficult for clients to actually understand the different degrees of environmental ambition that is baked into those products and compare them one to the other. So clarity in terms of definitions, which is set through standards and labels, is critically important to protect the integrity of these markets and to create the trust that's so much required to make it easy for investors, companies, and customers to, with confidence, and using credibility tools and solutions to move into that direction and transition. The second area is about the transparency. I think there is hardly ever any discussion on this topic that doesn't touch on the challenges that the industry faces when it comes to data and transparency. We need mandatory disclosure. I think it's now more or less widely agreed that climate risk is indeed an investment risk. What that means is that it needs to be managed and very much informed by consistent, reliable, credible data. The good news is that we've witnessed in the last couple of months and years a very important convergence in the market when it comes to reporting standards. We saw last year at the COP26 the announcement of the International Sustainability Standards Board by the IFRS Foundation. And the hopes in the market are really high in terms of the outcomes that the ISSB is going to produce, the standards, and how they will shape the market to drive towards the creation of that standards and comparable data. In addition to that, what has happened is primarily due to market pressures, but more recently also due to regulatory pressures. We've seen an increase in data availability, and I think that's also another very good story that we should highlight. We looked into the Refinitiv ESG data, and we prepared a quick chart, which we would like to share today, that looks at data availability across some of the key climate-related metrics in 2015 versus 2020. And if we can jump to that slide as well on the webinar, that would be great. So what we see here is global disclosure rates, as mentioned, 2015 versus latest data, which is a mixture between 2020 and 2021. Overwhelmingly, the story is more data is being produced by companies, and that's really positive news. It's true across the easier metrics like Scope 1 or Scope 2 GHG emissions, where we're starting to get more and more used to see these data in corporate reports. But it is also true when it comes to a lot harder KPIs like Scope 3 emissions data, where we see significant increase in the data that is published by the companies. But still the percentages are relatively low. So the gaps we need to close are becoming smaller, but they remain still in the picture. The third area that I wanted to touch on was about targets. And you see on this slide that we do see more than 50% of the companies setting forward a reduction target on their GHG emissions. And this is a great first step that many companies are embarking on. They understand the importance of setting a strategy and a commitment for themselves. But now the hard work begins. Because one thing is to make a commitment, and a completely different story and a bigger challenge is to execute against that commitment, especially in an area where, as Jaco described, there is no blueprint. There are no paved ways that we can follow, but we need to build those paths as we go.
Thanks.
Back to you, Jane.
That's a great point. And Ellen, I just, this is such a fantastic chart. I just wanted to add 2 points to that. One is that we haven't only seen the volume of the data kind of increasing and more corporates making disclosures. It's also the quality of that data that is changing dramatically. So what we see here is that comparison with 2015, the Scope 3 emissions or the climate targets that companies were disclosing in 2015 are really very far away from the type of disclosures that we get today. So, a company may have made a commitment to reduce its emissions by 20% back in 2015. But we wouldn't know whether that was an absolute target, whether that was an intensity target, what scope that applied to, even what share of the emissions of the company it covered, right? Today we get, very sophisticated disclosures around that. The same applies to scope 3. In 2015, that might have been the emissions from the business travel of the company. Now we see companies trying to systematically map their emissions through the value chain, upstream and downstream. And that is really a game changer. The other piece around kind of this, how do we implement stuff? We have tomorrow the first meeting of the UK transition plan task force. And Jane, I believe we're both gonna be there at the meeting tomorrow. And the discussion there is really about, what should go into a transition plan. We all know we need credible transition plans for companies, but we don't know yet. We have announced that they're going to become mandatory in the UK, and lots of companies and investors around the world are waiting for these transition plans. But there's no consensus yet on what is meant to go in a transition plan like that, or what a data set should look like that measures whether companies have credible transition plans or not. And so I think that illustrates this challenge that at the same time, we know where we need to get to, but how are we going to get there and what the tools are? We need to innovate them as we go along. And we can't let the perfect be the enemy of the good on that journey. But we really have this massive pressure in the market and coming from investors for granular, high-quality data that gives us a view across the investment universe and increasingly across asset classes where companies and assets are on that journey.
Yeah, and I think it's quite interesting, kind of this element, because actually what it does is it illustrates the fact that there is no single silver bullet here. It's actually what we need is a real acceleration towards the carrot and the stick in terms of mandatory disclosure requirements. But investors and banks and finance actually really kind of also really sort of demonstrating the desire and the demand for that data as well. I think it's super important that actually that investor voice or the lender voice comes through kind of loud and clear to companies to say, look, mandatory reporting requirement or not, we need this data for our capital allocation decisions. So I think it's really important that we have both kind of carrot and stick going on, but also companies acting proactively. So I'll just share the fact that LSEG published just last week its first climate transition plan, where, we, like Jaco, you say, there is no blueprint about what should be in a climate transition plan. So, I was very much involved in the creation of that document, and we don't know if it's right, but what we've done our best attempt at saying, look, these are our targets, this is the ambition, these are the pathways that we believe that we will focus on to actually achieve some of those targets. But we don't have it all worked out, and we will refine over time. So yeah, I just think there's some few interesting themes there. I wanted to come on to, this is a super interesting chart, Eleanor, and I think it does show that, actually we're going in the right direction. I would argue that obviously, let's say if you look at scope 3 emissions, 39% is clearly better than 24, but there's still a long way to go in terms of, the remaining balance. And I think actually for most organisations, a large part of their sits in that scope 3 bucket. I want to come on to kind of data gaps actually and start talking about specifically where we're seeing some data gaps and how quickly you believe that actually we might be able to close that gaps and what sorts of things we're doing to try and close those data gaps, basically. Maybe come to you first, Jaco.
Yeah, I can give you one example. We recently, we had the COP26 conference in Glasgow. I'm sure everybody heard about that. And one of the things that happened at Glasgow is that countries came with all kinds of new targets, right? They had already set their nationally determined contributions, which is effectively their 2030 plans back in Paris in 2015. Some of the countries had updated those commitments, and a lot of countries had set new net zero targets for 2050 or in some cases for 2060 or 2070, right? And you have a huge diversity of countries that are setting these targets. And again, the language, the way that they cover them, the way that they describe them is quite diverse. So we try to develop a tool that allows us to compare these targets and say, okay, if you look at the 2030 target for Switzerland, how ambitious is that to the 2050 target for India, right? And so we did that with a tool that's called the Implied temperature rise, a metric where you basically say, well, if all countries were equally ambitious and setting their targets in line with the target that I'm examining, what would be the temperature outcome for the globe? And so you can kind of create this consistent metric that allows you to compare over time and across geographies the targets and the ambition levels of countries. And what that shows us, I mean, there's lots of interesting kind of findings that you can draw about that. But one of the things that we found that I found really surprising is, if you look at the net zero 2050 commitments of countries, they don't actually add up to 1.5 degrees. They add up currently to 2.1 degrees, right? And so it shows you where who is leading, who's a laggard, where we are making progress, and so this is just one example that we really developed for investors that are investing in sovereign assets, right? Sovereign debt. But, this is just one of the many, many examples where we're creating tools to analyze new types of data, compare that, and help investors to guide them when they're thinking about their asset allocation and their risk and opportunity exposures.
And then, so, I mean, that's talking about at the sovereign level, but what about the company level?
I mean, it's a very similar discussion. We have now companies setting net zero targets left, right, and center. In many cases, we don't know what they mean, right? And so there's huge investor initiatives like Climate Action 100 Plus, CA 100 Plus, where investors with a combined assets of over 60 trillion have come together and said, okay, at least for the systemically important carbon emitters, those 150, 160 companies that drive the majority of the emissions on the globe in the private sector, can we assess the credibility of their targets? And that is a massive data collection exercise and methodological innovation exercise. Tomorrow, actually, we're launching the second version of the CA 100 Plus benchmark. I'm sure you're going to read in the FT and elsewhere about it, so look out for that. And you can go on the website, all the data is publicly available, and kind of explore that, and you see how much complexity there is. Are you setting the right long-term targets? What about your medium-term and your short-term targets? Do you have the right transition plan in place to achieve those targets? Are your CapEx commitments consistent with those transition plans, et cetera, et cetera? So there's this huge raft of issues that corporates need to consider. And so it's this active dialogue between corporates and investors, and companies like ours can help with transparent data to facilitate that dialogue. And that is what it is really about finding that common language between investors and corporates and the broader stakeholders around them to say, okay, where are we tracking towards in this transition? How can we accelerate further? Who is forging ahead? Who is falling behind? And so, work collectively to really achieve those goals of the Paris Agreement.
But how do you move beyond 160 companies? Whether or not they're systemically important in terms of like kind of energy, but like that's a drop in the ocean in terms of the number of companies on the planet, right?
Yes, I'm sure Elena has a lot of things to add here on that, but this is exactly what we're trying to do. So we are involved in another initiative where we've just created the TPI, the Transition Pathway Initiative Global Climate Transition Center, where we're scaling publicly available data from a few hundred to 10,000 companies. Now, that's not something that you do in a couple of months. It's a trajectory to get there. But again, it's that commitment of working with asset owners, working with the academic community, working with the corporates to create this transparent data sets. And it's really around kind of scaling across the universe. Across the investment universe rather than the planetary universe.
Don't hold back, Jacco. I mean,
But that is not easy to do. Data collection sounds easy, but it's actually really tough stuff that requires great technology. It requires great know-how, investors, infrastructure, and that's in many ways the core business of the company. And I would be have you come in there as well, because I think you have been leading a lot of those efforts to collect that kind of cutting edge.
Yeah, Elena, let's hear from you in terms of, and specifically, what some of the kind of hard to reach gaps are in the ESG data world.
Yeah, and I definitely want to highlight that nowadays it hardly ever happens that we have conversations with clients where the topic of climate transition doesn't come front and central to the meetings, whether it's with asset managers, with banks, with consulting firms, with corporates. This is really front and center to everyone's agenda. So I think we face an interesting challenge where the demand is there, the demand is surpassing the supply, and the supply is rapidly catching up, and it's primarily behind due to the lack of standards, mandatory disclosure, and data availability. Now, if we think about the process, regardless of who is embarking on this journey, whether it's a company, an investor, a bank, the process always starts with diagnostics. Let's find out where we are currently. What is our current exposure to which sectors, which regions, which industries? Once you have that step, you can only then build out the strategy and planning on where you want to go and how you want to get there. And then you execute and report and validate and create a feedback loop where you adjust and make enhancements and improvements as you go. But with the first step, the diagnostics, you really need to have data. And when we think about climate transition, I like to simplify it and think about it in two ways. One is targets, commitments, the direction of travel, where you want to be, how you want to be positioned in this space. And as Jaco mentioned, the granularity and comparability of this data is certainly improving. But I will reference a recent conversation I had with a very large asset manager who told me our biggest problem right now is to find consistent company targets data. And we struggle with this challenge as a data provider ourselves. Our analysts struggle a lot to understand company targets, ambitions, and capture them in a way that it's apples-to-apples comparison. So a lot of improvements, a lot of granularity, but as long as there is no global standards on what needs to be reported and how, we're going to continue facing the challenges that we face today and make assumptions which can be vastly different from the actual reality. And I want to call out in this area actually some of the market-leading work that FTSE Russell has done and contributed to the last TCFD report in the form of a use case of what this target reporting should look like to provide meaningful information for investment decision-making purposes. The other side of the equation is actual facts. So one thing is to have commitments, intentions, plans, potentially of how to get there as well. But the other thing is, what do you do today? What is your performance currently? And that's where the industry is still facing some challenges. And anyway, if we can flip on another slide, which we produced to help the audience put some of the concepts that we're talking about in practice, and actually it's the previous slide with the bars. Yes, thank you. This one. What this shows us is breaking the reported data across high impact industries and comparing where do we see actually data reporting and how that compares versus the global average. And global average is also low impact industries. So here the question of materiality and the value of data becomes quite central. The industry has struggled with the fact that the volume of data is growing, no doubt about it. But is all of the data that's produced actionable and meaningful and truly valuable? Or do we have gaps in those key areas which are so important to ensure that the decisions we make are not only sounding right and good, but they actually generate the real economy impact that we as investors or as corporates or as consumers want to drive towards? And what's disappointing clearly is we do expect the high impact industries to be tracking, monitoring, and managing their Scope 3 emissions. But the disclosure rates are actually even below the global averages for many of the industries. And I think that this highlights a very important area of future work that needs to be central to the industry as a whole. And it's an area where we and our peers have put a lot of effort in solving for to enable the market to overcome those existing challenges, whether it's by building out proxy models or estimated models to fill in those gaps. Because the data is essential to make investment decisions. It's essential to diagnose and understand where the risks are and where our actions need to be zoomed in.
Yeah, I mean, just to jump in there on Scope 3, I think just by way of bringing it to life, let's say from a corporate perspective, so LSEG PLC, over 90% of our overall emissions are from Scope 3 purchased goods and services, which is huge, actually. And it really gives a perspective around where we should be pushing and kind of orientating our efforts towards. I think that actually there's probably lots of people experiencing the same kind of realization that actually the data that they have on their supply chain is really not where it needs to be, actually, and there's a lot of estimation going on, which could be fine, but actually what we do know is that it's only going to sort of last for so long that we can actually estimate. So one of the things that we're doing as a business is to start engaging much more closely with around about, I think it's about 250 of our suppliers who are responsible for around about 2/3 of our Scope 3 emissions from purchased goods and services, really with the intention of asking them to set science-based targets themselves so that we can all get on this same pathway. But this is kind of a huge, heavy lift in terms of effort and engagement and man hours, or woman hours, I should say, to get this ball rolling. So I would definitely concur that this is definitely a gap that we're seeing currently. I've got a question. If you don't mind, speakers, I might kind of pose this to you. So one of the questions is about, do you think that uniform disclosure requirements are the key to pushing this data transition forward? And I guess, can I add on to that question, is how likely is it that we're going to see uniform disclosure requirements? I think
my answer would be a qualified yes to that, in the sense that there is many data points today that should be part of mandatory disclosures. Take Scope 1 and 2 emissions. We've seen in some jurisdictions, including in the UK, this becoming a mandatory requirement. And lo and behold, the sky hasn't fallen on our head. Those companies are still alive and thriving. And in the same way that we expect companies to make disclosures around their revenues or their capital expenditures or their management, for that matter, in 2022, we should expect companies to make disclosures around their Scope 1 and 2 emissions. And we know how to make those disclosures. We know how to measure those things, and we know how to make them available. And really, by making them mandatory, we're taking transaction costs out of the system. including the endless debates in companies whether they should be disclosing this data or not. Investors trying to bring estimates together, et cetera, et cetera. And we've now seen regulators in the US coming out recently to say, hey, that is actually a good idea and we should be doing that. And that's something that clearly, where we clearly should see more disclosures coming forward that are mandatory in nature. I think also there is something to be said about providing clear standards about how certain information should be disclosed. Elena mentioned the work that we've done around targets. We're not saying what type of target a company should set or how ambitious that target should be. But what we're saying that if you disclose a target, please give us all the relevant information that allows us to understand in detail what this target actually means. What scopes are you covering? What years? How many targets do you have? Because nowadays companies have multiple targets. And so it's very important for investors to be able to understand that information. There's other areas where mandatory disclosures are still more challenging because we maybe haven't agreed how we had maybe agreed that it is important, but we haven't agreed how we should disclose that information. We don't have a clear blueprint for that. And I give you one good example of that is capital expenditures. One of the kind of key data points that the most sophisticated investors today are interested in is how much are you investing into the transition and how much are you still investing in carbon intensive assets? Now, it's very important that we get the disclosures around this going. And there's a lot of initiatives happening in this space, but there is no agreed on set of metrics that regulators could come on and seize on and say, okay, we're going to make this mandatory. So I think that's why I'm saying it's a qualified yes. Yes, we need more mandatory disclosures around this to make the information set more homogeneous, to take transaction costs out of the system. But we need to do that in a differentiated manner and make those kind of disclosures mandatory or set standards around the types of disclosures that that are more mature in the market today, while at the same time not being a brake on innovation where we still need to develop the toolbox. And there's many areas that fall into both camps. So, but where we have these mature metrics like scope 1 and 2 emissions, making them mandatory really just helps us to move forward to move the dialogue forward and get away from estimated data, get away from greenwashing, etc.
Thanks. Elena, I want to come to you now. I've got another question from the chat box. And also, I'm going to be cheeky and ask a question myself, if you don't mind. So the question from the audience is the data that you've showed and shared regarding company disclosure, whether or not that is just UK companies or whether it's global. And then my question is, I'd like you to comment on, I guess, the fact that we're so far been talking largely around public companies. And I'd like your kind of comments and kind of perspectives on the extent to which we should be encouraging privately held companies to disclose similarly to what we're talking about here, and why. And why for your reasons. So if you could cover over those two things, that would be great. Thanks, Elena. Over to you.
Thanks, Jane. So let me take the easy one first. So the data we were showing is global, not UK companies only. It's based on the companies in the Refinitiv ESG data set, which is on this slide representing more than 12,000 global companies. So it's a global view. And of course, we're happy to share with anyone country-specific similar analysis.
And Elena, actually, I've just had another question in which is relevant for this conversation right here. Can you respond to a question which asks that why the construction industry is not shown on that chart when it's a massive contributor to gas emissions?
That's a very good point, and it's not. I don't think it's an intentional omission from the chart. I think it's size question, probably more than anything else. And again,
but in terms of that data, you do. I was just going to say that the question also is do we have that? We do cover the construction industry in terms of definitive ESG data, right? That's totally available on the platform. So whoever was asking
I mean, the same analysis can easily be run on Workspace or other platforms where the ESG data is available across all sectors and industries and across different time durations and periods. Absolutely. On your second question, Jane,
and then maybe a comment on the other question.
Yeah, that's a difficult one, and I think the challenges there with private companies are even more interesting than with public companies. One development which I think is building also on the previous question that Jaakko responded to around uniform data availability and is this going to help move us forward, is regulation is a key player and a key driving force to the momentum and acceleration that we see in the market around climate transition, around sustainability. And specifically the NFRD enhanced proposal, the CSRD, in addition to moving away from voluntary disclosure to mandatory disclosure requirements, which from our perspective is central to the successful execution of our ambition in this space. The proposal also expands the scope of companies which are impacted by the regulation into private companies. And it's really important for private companies to be included into these efforts and initiatives because most of the impact actually happens across private companies. Whether those private companies are large issuers of bonds, for example, or whether they are within the supply chains of public companies, this is usually where most of the impact is generated. And we do require transparency there more so than we do elsewhere.
Great, thank you. One of the other areas to come on to is arguably a data gap, which I think it's fair to say we really haven't cracked yet. And that is the data gap which relates to nature and biodiversity and its role in the climate transition. So, Eleanor, I know this is something that you've kind of been involved in a bit. So perhaps you could touch on that in terms of what we're seeing in the nature space. Are we getting any closer to having data? And if not, how long do you think it might be until we actually get some acceleration around that?
That's a great question. When we look at it from a corporate reporting perspective, the gap remains huge. Because if we talk about nature and biodiversity in particular, most of companies tend to measure it in terms of land use, restoration activities. But actually, you do need to go a lot deeper in terms of areas of impact and what are the types of biodiversity risks in those areas. It's a massive and complex data challenge that the world faces as a whole. And it's not just the companies that avoid this conversation, avoid to talk about those risks in their annual reports. It's the data availability that prevents them from having a good understanding of their own impact through their supply chain. And normally, companies themselves have visibility of their supply chains only at about first year or max second year, but have very little visibility further down, and that's where most of the risks exist. So in terms of corporate reporting, data availability is marginally improving. But in terms of development in the industry, to start putting more emphasis and work in this space, similar to what we saw with climate a few years ago, we see a lot of positive development and momentum. And I'll call out just one. A couple of years ago, the Task Force for Nature-Related Disclosure was created. we are members of this task force and engaging very actively and lending our assets, our knowledge and data to try to solve for those data challenges that I described. And TNFD published the first report just a couple of days ago, which is a great baseline, a guide that I think a number of firms are now trying to put in place in terms of enabling companies to report against those definitions and guidelines.
Thanks, Helena. We have got an audience survey poll that we might go to now, I suggest, because we're keen to know whether or not the challenges that we've covered in this discussion and some of the risks and gaps mirror your experience. So if you don't mind having a look at this question, so what is the main challenge, the single main challenge that you're facing at your firm in regards to the climate transition? So is it transparency on data and disclosure? Is it risk mitigation? Is it regulatory compliance? Or is it strategy and vision development? So if you want to have a little think about that and input your answers now, thank you. Okay, somewhat unsurprisingly, given the nature of the topic, is transparency of data and disclosure. But actually interesting to see that the regulatory compliance side of things is coming out quite strongly as well. And I think maybe that just kind of illustrates the fact that we've got a fast moving agenda here, and we're seeing obviously reporting requirements around TCFD starting to bite now, with that kind of washing its way through the financial sector through, not just listed companies, but also pension schemes, asset owners, asset managers, etc. So, as this kind of systemic change is happening, no wonder that 18+% of you are saying that that's a challenge right now.
Yeah, and perhaps to add to that, I think sustainable investing and sustainability disclosures has in the past been really a regulatory Wild West. I think that is something that we see changing. The regulators, all of the major regulators have spent a lot of time on this issue, have created teams around this, are asking questions, and some of them have started moving. I think particularly what we now see in the US is really meaningful. We have to see it's obviously a politically charged topic over there, so we have to see how far regulatory rulemaking will go. But it's certainly, as this is becoming financially increasingly material, and as this topic just moves up the agenda, we will see more regulation around that. And we will see regulation around that not only in the EU or not only in advanced economies. We also increasingly see regulators in emerging economies looking into this topic, creating things like green taxonomies, disclosure rules, et cetera, et cetera. So I think this is certainly an area that will become an increasing concern for investors, and that in itself drives demand for data, right? Where investors want to know which companies have revenues that are eligible under the EU taxonomy. What funds comply with the SFDR regulation in the EU, but also, how do these companies look like against the Chinese taxonomy? Which companies have green bonds that meet regulatory requirements, et cetera, et cetera. So it's increasingly that dimension around meeting regulatory demands is, I think, becoming a driver for demand for data. However, I think we need to be careful that we don't forget the exam questions. It's not only about meeting the regulation, it's also about where is that risk and where is that opportunity, and being mindful about the fact that the regulatory piece is moving slower than the market, and not all risks and opportunities are yet captured by regulation. So kind of continuing that focus on where on trying to capture the risk and the opportunity set is really, really important.
So look, we don't have too much time left, but we've got a question here which sort of touches on something that you just spoke about, which is about kind of where a company is on the planet, right? Which is very much around. I'm keen to know as well, where are the data gaps in terms of different economies? Because, as investors, global portfolios, global supply chains, from a bank's perspective, thinking about kind of where the lending risks, etc., portfolios increasingly global. So can you just touch on where we're seeing the blind spots from a geographical perspective? And maybe, can we come to Eleanor first, maybe? You can have some sort of, and then we'll come to Jaakko, and then I think we're pretty much about done. So Eleanor, over to you on geography.
I mean, not surprisingly, we do see more data available and following consistent definitions and disclosure standards from the large caps. Data tends to become more sporadic and patchy when you go down into mid and small caps. And broadly speaking, disappears as you move into private companies. And this holds true across most geographies. But unsurprisingly, in emerging markets, we tend to see less reported data than we do in developed markets. Because let's face it, ESG reporting today is costly. The lack of standards and industry-agreed reporting frameworks creates a huge cost and burden to produce the data that different stakeholders are pressuring companies to obtain and publish. So enabling and having mandatory standards is going to reduce the cost for companies and improve the data availability and consistencies, I believe, across regions. Our coverage is more or less evenly distributed across different markets and regions. And clearly you do have, in terms of significance of the different sustainability issues and topics, you see in some markets, some of them having a stronger presence. And it's quite natural. I mean, in some regions and countries, social challenges are a lot more central to corporates, to their purpose and mission, because it's the type of problems these organizations and individuals that work at the organizations are dealing with on a daily basis. So you do tend to find more data availability based on the type of issues that companies are dealing with in the regions where they operate. But yeah, so it's very inconsistent, and the drive towards global standards is going to hopefully solve for some of those inconsistencies.
Thanks, Eleanor. Closing thoughts, Jaakko?
Yeah, just echoing really that. I mean, what we have seen changing is that, sustainability disclosures have really moved from being a largely Western European story over the last decade into a global affair, including now quite substantial sustainability disclosures in a lot of emerging markets, for example, in Latin America. But that division between large companies and small companies is still massive. Mm-hmm. So we should see now more climate disclosures from large and mid caps in China than we see from US small caps, right? Where disclosure rates around scope 1 and 2 emissions are in the single digits. If you look at listed small caps companies, let alone privately held companies. So thinking about how we mature this space and scale this so that we can really start covering the entire economy with the data that investors need, I think that's an important next step on that journey.
Yeah. Thanks. So it's clear that I think we all have a role to play, actually, whether we're asset owners, whether asset managers, banks, corporates. Actually, I think we all have a role to play in trying to promote transparency and disclosure across our full investment chain, across our full supply chain. So it's been a fascinating conversation. Thanks so much to both Eleanor and Jaco for the conversation today. To the audience, thanks for dialing in. We hope that you enjoyed the debate and it's been useful. We, as ever, will circulate the recording and the slides following, and we hope to see you again soon. So thank you and have a great day. Bye.
Thank you.
Thank you.